This is Jay Martin.
All right, what's up, guys? Welcome back to the Jay Martin Show. My name is Jay Martin, and I'm joined once again, and it's been a while, by Ian Paterson, the CEO of Purilock Security. Now, Ian, I'm excited to have you back on the show, chat with you today, because the last time I had you on the program and we introduced this story to my audience, Plurilock was an early stage company with some pretty bold plans. At that point, you were doing about $500,000 in revenue. A lot of conceptual vision that I got excited by. We're having you back on today. Just recently, you guys reported your Q3 financial results and reported $46.8 million in revenue. That's a massive increase since the last time we had you on the show. And it always excites me when we sit down with an entrepreneur and then we have them back on and they did everything they said they were going to do and more. So I'm excited to get an update from you today. Why don't we start though, because it was about a year ago since I had you on. Could you reintroduce the Plurilock story as simply as possible? What is it that you guys do?
Absolutely. And Jay, it is really good to be back. The way that I describe Plurilock today, we're in the cybersecurity space. And I don't think it's any surprise how important cyber is. Estimates out there that cybersecurity as an industry, as a whole, is over $1 trillion of opportunity. Our position within it, we have two parts of our business. First, we have unique intellectual property that allows us to identify people based on how they type on the keyboard, how they move a mouse. We've packaged that into enterprise software that we sell to government agencies, to financial institutions. There's a second part to our business, though, and this was really the part to your description that was more of a vision the last time we talked, which was growth through acquisition. So we are actively acquiring regional cybersecurity players in North America who have great access to customers. We are rolling those up and we are integrating them into a platform. So over the last 2 years, we've made 4 acquisitions to date. And what I'm seeing right now is that there is tremendous opportunity, particularly given the current economic climate. There's tremendous opportunity ahead of us. And so I'm excited to talk to you about it.
Okay, well, let's break that number down first and foremost, and we can speak to the acquisitions, but 46.8 million in revenue. Talk to me about the path to that number.
So one of the things that we learned as an early stage company going public is that we were looking for a way of delivering our core intellectual property to people who need it the most, and those people tend to be organizations, whether they're in the public sector or in the private sector, who have both a high degree of regulatory need for cybersecurity, as well as, frankly, a lot of risk. We've seen over the last couple of years with really high-profile attacks like the Colonial Pipeline attack, or even this year, a number of others that have just had really large ramifications, that businesses are starting to prioritize cybersecurity more, either because they feel that the risk is there from the bad guys, or because they're being forced to. So there's an increasing amount of regulatory compliance that is necessitating the need for strong cyber controls. Now, in order to go to market, what we had found was that cyber is very fragmented, and what that means in practice for our customers is that it's difficult to buy all of the cyber products that they need. Because there's a lot of them. And so what we found was if we actually go in and rather than trying to compete with the other cyber vendors, if we simply acquire particularly the resellers, the value-added resellers who sit at that point right in front of the customer, not only do we solve the customer's problem of being able to get all of the products that they need, but we also give ourselves an unfair competitive advantage in being able to then position our proprietary products to those customers. And I'll give you a statistic. We recently added an advisor to the company by the name of Patrick Gorman. He was former Chief Information Security Officer at Bank of America, as well as Chief Security Officer at Bridgewater, one of the world's largest hedge funds. And he had a statistic when he was at a large financial institution. He had over 200 cybersecurity products from over 100 different cyber vendors. So just an unmanageable number of products. And even just from a procurement standpoint, managing all those vendors is really difficult. And so that's just the dynamics of this industry and really informed our M&A strategy of this roll up of regional cybersecurity players.
Now, what's the cause of, because that's an unmanageable number of products for any organization to be managing 200, for example. I am assuming that is a consequence of the expeditious growth of cyber threats and then an industry trying to play catch up all of the time. And so different companies solving different solutions, and the company needs the holistic solution. But to date, probably, and this is behind your M&A strategy, I assume, historically, there's been no company that's been able to tick too many boxes at once. Is that correct?
That is correct. So what happens is there's a new threat that emerges. So folks will probably be familiar. There used to be viruses. You don't really hear about viruses anymore, but you still have to purchase antivirus software. So every time there's a new threat, there's a new defense against that threat, but you don't throw out any of the old defenses from last year, the year before, the year before that. So you still need firewalls, you still need antivirus. Now you need next-gen antivirus. You might also need endpoint detection and response. You might also need extended detection and response, EDR and then XDR. So those are four individual defenses, all fairly similar to one another, and yet you as an organization, as an enterprise, you actually need to deploy all those things to defend against those threats. Now, in addition to those, what we would call point solutions, there's also companies out there who are trying to build platforms saying, listen, this is an all-in-one, it's an all-in-one AV, next-gen AV, EDR, XDR. And so that's, in some cases, you could replace some of those point solutions. But what we have found is that in addition to having those platforms, you need those platforms and you need point solutions. So all of this complexity is very, very difficult for customers who are just trying to do their regular business. It's very difficult for them to be able to procure all their solutions, deploy them, make sure they're working. And that's really, again, what is informing the strategy of going out and acquiring the regional players.
Well, and I think that we're entering a new era of distrust, and it goes the whole way up the food chain from individuals like myself, who maybe are at more risk of attacks or hacks, et cetera. But we cover the commodity sector greatly. We're watching this all the way up to the sovereign states, right? And geopolitically, we're probably moving from an era of reasonable trust, right, where we trusted, cheap labor from China, cheap energy from Russia, and cash from the US to make a global system that worked quite effectively. And that trust is broken. I don't think it's going to be repaired during my lifetime, more than likely. And so I'm curious about your contract with the Canadian Department of National Defense. Correct me if I've got the title wrong, but how did you get a seat at the table? Because that's where you want to be. You can work with individuals, with corporations, but you want a seat at the national table, right? And so how did you get that seat?
So you're hitting on something that I think people probably know intuitively, but they may not know it explicitly. And that is that from my perspective, and this is a personal belief, we're seeing a bifurcation of cybersecurity supply chains. So there have been a couple of pretty well-known examples of that. Think of Huawei, that has been shut out of the 5G and telecom space. We also saw that in the cybersecurity space. Kaspersky, great Russian antivirus company, very difficult for them to do business now in NATO allied countries because they're perceived to be either beholden to or somehow affiliated with the Russian government. And so we're seeing this split between companies that are in the West and sell to Western countries, and companies that are in the East and that sell to Eastern countries and companies. And so part of the strategy for Plurilock is that we had always been very, very intentional to surround ourselves with both people and institutions who would benefit from either our technology or our solutions. So as an example, very, very early on, Plurilock added a former director of the NSA, Admiral McConnell, to our board. We've rounded that out. We also have Ed Hammersley. He used to run the cyber portfolio at Raytheon. This year, we added Jen Swindell. She was formerly at Booz Allen Hamilton. So again, U.S. defense contractor. So we've been very intentional about building out our team to have the right to have the right stakeholders. Now, I think part of that has allowed us to do a tremendous amount of business with both the U.S. as well as the Canadian federal governments. And we actually started, which is a bit funny. We, as a Canadian company, we've been significantly more successful in the U.S. than in Canada, although that has changed as a result of our acquisition in Ottawa earlier this year. So, again, strategy: acquire regional cybersecurity players, make our high margin products available through them. That's exactly what we did. We acquired Integra earlier this spring. Integra was doing existing business with the Canadian federal government. As a result of that sales force, those relationships, and those master service agreements, we were able to cross-sell our proprietary product into an agency called DRDC. This is part of the DND, the Department of National Defense, where they do very sensitive research. So it's a defense research agency. And as a result of that acquisition and that strategy, we're able to announce a very key contract with that agency. So again, it's really following the industry tailwinds that are taking place, this bifurcation of industry of cybersecurity supply chains. And then that has informed both the team and the structure, the strategy, and you're now starting to see the results of that.
Okay, now I want to give you the opportunity to speak to the valuation, because on paper, you're doing all the right things, and this is reflected in your financial results. However, you've not been exempt from the hammering that every single tech company has gotten, most companies in general, but tech specifically. And so the valuation is low. What would you tell prospective shareholders who are looking at the chart right now, and looking at the financial results and saying this doesn't make sense? What would you say, Ian?
Well, I appreciate that question. I think the reality is that there are certain things within our control and certain things that are not in our control. Obviously, to your point, tech as a whole was higher last year than this year. But I think that what that causes us to do is to really focus on the things that we can influence. And we are staying extremely busy. In fact, on the M&A side of things, we're even more busy now than we were in previous times. Because the reality is, if you're a buyer, it's a great time to be buying. And so we are actively looking for acquisition targets. Again, we've now got 4 under our belt, and so there's a certain amount of data points that we can point to in the rearview mirror to say, look, this is what we have done. I think that we're a little bit more credible now because we've accomplished those things. But now is really the time to focus on the business, focus on operational excellence, focus on acquisitions if they are available, if we like them, if they are accretive, to focus on those opportunities, because there might actually be opportunities now that may not have existed 6 to 12 months ago, and that's really what we need to focus on.
Yeah, I like that. There's a time to hunt and there's a time to harvest, right? And so frequently, I have entrepreneurs on the show, specifically in the commodity sector, which, that sector gets hammered with such cyclicality. And when I have an entrepreneur on the show who stayed busy during the bear market, everybody notices, right? Because when shit hits the fan and things get really hard, most entrepreneurs hit the exit door, but some stay busy and they're still able to access cash and put that cash to work. In your case, M&A. So talk to me though. I'm curious about the why behind further M&A. What are you looking to accomplish with future acquisitions, Ian?
Well, I think that your point about access to capital is critical. And this is actually why earlier this year, we put in place a line of credit because we wanted the ability to access capital in times where maybe accessing equity markets were not as attractive. So we were quite intentional about that. And in fact, the most recent acquisition we did, which was a company called Atrion, tremendous asset in the New York, New Jersey area, we were able to leverage our line of credit for that acquisition. And we see that as a model for moving forward. So your point about why, like ultimately, when we're looking at M&A opportunities, we are looking at companies that are already profitable. And so being able to add cash flow to the bottom line. We're also looking for companies that have great relationships with customers. And those relationships with customers can be measured by the longevity, typically, that those customers have existed with that organization. There might be both a relationship component. There might also be contractual elements like master service agreements or contract vehicles, which are functionally similar, but one is public sector, one is private sector. And then also, is there a regional footprint where we're not currently in? So today, Plurilock is in Vancouver, Victoria, Ottawa, Los Angeles, New York, New Jersey, and we've got 2 offices in India. but there's a lot of areas that I didn't mention, specifically in North America. So we're looking for that other footprint, but ultimately those other acquisitions that we are looking for is, again, to feed into that strategy. And so the strategy is building up distribution, building up profitable operations from the acquisitions, and then cross-selling and making available our higher margin owned software products through that channel. So when we go in and we do an acquisition, the first rule is do no harm, make sure that business continues to operate, be able to leverage the efficiencies from the platform that we are building and that we've already accrued, and then ultimately do right by the customer, give them more options to stay secure. And that's ultimately the loop that we are running.
Okay, that makes sense. And so when you acquire, you're looking for client base, you're looking to acquire distribution, at times looking to acquire cash flow, and then integration of future or additional products that you can then plug into the same client base and streamline. Getting back to your previous example of managing 200 different software products for the cyber risk, right? That's what you're looking to streamline. So we're back to that thread now. Okay, so as a shareholder, I'm excited that you're staying busy, right? This is what I love to see when things are really tough and the entrepreneur keeps charging as hard as possible, because it's a timing game. When the market turns, you're going to be positioned or you're not going to be, right? And obviously I want you to be positioned. So I like what I'm hearing. I want to ask you about any attention, because, retail versus, I hate the term smart money, but let's just use it for simplicity for this conversation. Have you gotten the attention of any analysts, any banks? Like, who's on your team right now from the smart money world?
Yeah, it's a good question. So Plurilock does have two analysts that cover the stock, Lee Jones Gable as well as Industrial Alliance. This is, I think, a reflection of the fact that we actually have been executing, and we've kept busy over the last really 2 years since we've gone public, but we've really started to accelerate in the last 12 months. And my hope is that this is just the beginning, that there's a lot more ahead of us than there is behind us in terms of what we want to accomplish. Okay,
Ian, any last words you want to leave my audience with?
I just encourage people to reach out. Plurilock.com is the website. We have a number of resources. Obviously, there's the investor resources. You can sign up for our mailing list and get added to the distribution list. But even just at a more general level around cybersecurity, we also publish a twice weekly cybersecurity newsletter. This is a great way just to stay up to speed on the industry itself. That's something that we put together. And so if folks have any specific questions about Plurilock, about the company, absolutely, definitely reach out, Ian@plurilock.com.
Okay, and the ticker is PLUR. Okay, look, Ian, thanks for coming back. Like I said, I love having an entrepreneur back on after they've done what they said they were going to do and more. So it's always motivating to see. We're betting on the people in this business, right? That's who we're betting on. The decision makers. They're going to surround themselves with other great thinkers and put our money to work, right? So, okay, look, Ian, thanks again for your time. And I want to do this again in less than a year. How about that?
Sounds good. Thanks, Jay.
We actually need to have a damn good recession.
The Russian economy is a gas station run by the mafia.
$41 trillion has been created out of nothing.
There's a stranglehold in China on most of these resources.
The outlook and fundamentals for the metals remains very, very strong.